Hello viewers, I highly welcome all of you to AE Accounting Tutorials. Don't forget to subscribe to my channel so that immediately I drop a new video, you get a notification right there on your devices, and also like, comment and share my videos for the benefit of others. Today we are going to look at adjustment for final account, specifically for a sole trader, because we have so many business organizations that prepare final accounts of their businesses. We have partnership business, we have companies, we have manufacturing firms, we have departmental businesses that prepare final accounts of their businesses. But basically today we are going to look at how we make adjustment to final account of a sole trader. But then when we talk of final account of a sole trader, we are actually talking about the income statement and that of statement of financial position. So we are going to look at how certain items will actually be adjusted in a final account of a sole trader. In a typical final account question of a sole trader, mostly the question will be given in the form of a trial balance and that of additional information. But note, items that are found in the trial balance are always treated once in the final account, just because they've already gone through the double entry principles. And items that are also found in the additional information, they are also mostly treated twice, just because they have not yet gone through the dual aspect of bookkeeping. Because of that, we have to actually treat them twice in order to complete their own double entry principles. Okay, but basically we are going to look at how accrued and prepayment are being treated in the final account of a sole trader. So we are talking about accrued. Accrued and prepaid. How you treat these two items. As far as accrued and prepayment is concerned, we will be basically looking at how four items or four areas of accrued and prepayment will be treated in the final account of a sole trader. We have, first of all, we have expenses. The expenses we will break into two. We have expenses accrued, expenses prepaid. We have income accrued and income prepaid. So we are going to look at how these items will be treated. So we will be given just a simple practical question, or a simple practical question that involves all these items, and we will see how you treat them in the final account of a sole trader. Okay, so we'll be having our trial balance. It is just an extract. Okay, just an extract. The trial balance is just an extract. We have our debits, we have our credits. We'll be considering rent and we'll be considering expenses and that of income. So let's talk about rent. Maybe rent of 1,000 cedis. We have maybe two. We're talking about maybe investment income. Maybe investment income of, let's say, 2,000 cedis. Okay. Maybe in the additional information. You'll be talking about maybe rent accrued is, let's say, 200 cedis. Maybe you have rent, maybe prepaid, let's say also 400 cedis. Maybe we'll be having an investment income accrued of, maybe investment income accrued is also, let's say, 800 cedis. And even you may have investment, maybe income prepaid, also let's say 600 cedis. So we are going to look at a situation where these items will be found in the additional information, and we will see how, or further information, we will see how we will adjust them in the final account of a sole trader. So basically, we'll be looking at how we'll be treating expenses accrued. We'll be considering expenses. So we'll be talking about expenses. Sometimes they may be in a question where you may not see accrued. But sometimes you may be seeing names like expenses owings, expenses due, expenses unpaid, expenses in arrears, or maybe probably expenses outstanding. All these names are names that they can still refer to accrued. So anytime you see all these names, it's the same as expenses accrued. But first of all, when you talk of expenses accrued, we are talking about a situation where businesses incurred an expenses and then they've not yet paid for. Okay, so expenses accrued is basically an expenses that have been incurred but payment has not been actually made for. Okay, example, when you incur an expenses of 1,000 cedis and then you've maybe paid 100 cedis, or let's say you've paid 100 cedis, you've incurred an expenses of 1,000 cedis but you only pay 100 cedis, it means you are owing an expenses of 900 cedis. So at the close of the period, there will be expenses accrued of 900 cedis. Is that okay? Okay. So anytime there is an expenses accrued, as you can see in the I, rent accrued, the treatment is that we are going to add the expenses accrued to the expenses in the income statement, and we also add it to our current liability. Okay. So that is the treatment. So when we are looking at income statement extract, our income statement just extract, okay? When we are considering income statement extract, under the operating expenses, we are considering the I, so we'll be taking our rent of 1,000 cedis. Then we add our owings, expenses accrued or due. So we add a rent due of 200 cedis. This will give us 1,200. It means we are going to report this in the final account of a sole trader. Is that okay? In a situation where they will ask you to open the individual ledgers or individual ledgers of these items, you may be having your rent account, or having your rent account, but it is accrued, okay, or due. That's expenses due account. Expenses is an expense, okay, so it has a debit balance. Sometimes expenses we pay through cash or we pay through check, so we are considering cash. Maybe an amount of 1,000 cedis. An amount of 1,000 cedis, okay, and there is an expenses due or expenses accrued. You always add expenses owings, okay. So anytime you are adding an amount in a ledger, if the account has a debit balance, you record it at the debit side, and anytime you are subtracting an amount in a ledger account like this, if the account has a debit balance, you record it at the opposite side or the credit side. Is that okay? So we are adding, so we are going to record the rent due or the rent accrued, and this will be our balance CD, and the amount is 200 cedis. So the total will give us 1,200. This must also give us 1,200, okay, and then we will be recording this. You have 1,002 over here, and this will go to the profit or loss account, okay, the profit or loss account. But mind you, let me draw your attention to this. The income statement, we previously called it the trading profit or loss account, okay. So anytime I talk of profit and loss account, it is found in the income statement. The combination of the trading account and the profit or loss account will form the income statement, okay. So anytime I talk about profit or loss account, I'm still referring to the income statement, okay. So you report this amount to the income statement. That is why you can see 1,002 here, 1,002 here, and this balance CD will be balance brought down of 200 cedis. So this 200 cedis, we are going to add it to our current liabilities in the statement of financial position. So this is basically how an accrued expenses is being always treated. So let's also consider expenses prepaid. Anytime there is an expenses prepaid, the treatment is that you are going to less it from the expenses in the income statement and also add it to your current assets. Okay, that is the treatment. So this is how the extract of the income statement will look like. We'll be having your rent, the one being paid in the trial balance, which is 1,000 cedis. We have a prepayment or rent prepaid of 400. We always less prepaid in the income statement, so we less a rent prepaid of 400. Okay, and this will give us so it will give us 600 cedis. So we are going to report this 600 cedis in the income statement. Okay, and anytime you are being asked to open the individual account, you have rent account, but mind you, it's prepaid. This time it's not accrued. Rent is an expense, so it will be recorded at the debit side. Rent of 1,000 cedis. Okay, and there is a prepayment. We've overpaid, so we will be lessing it from the one being paid in the trial balance as we less from this place. So we will be lessing, so you record it at the opposite side as rent prepaid. But this should be a balance CD, and which is 400 cedis. The total of this will be 1,000 cedis. This place too must give us 1,000 cedis, and we'll be having 600 cedis here, and this will go to the profit or loss account. Okay, and this amount will be recorded in the profit and loss account. That is why you can see 600 here, 600 here, and this balance CD will come here as balance BD of 600 cedis. And these 600 cedis will be added to our current assets in the statement of financial position. When I talk of statement of financial position, I'm talking about the balance sheet we all knew. Okay, so this is how prepaid expenses are also treated. This is how prepaid expenses are being treated. Okay, so let's also consider income. Okay, we are considering income. We will break them into two. We have income accrued and income prepaid. Okay, so when I talk of income accrued, okay, when we are talking about income accrued, it is just very simple. It is a situation where businesses earn an income, but payment has not been made for. Okay, a situation where we earn an income, or business earned an income, but we have not yet received it. A situation where we've made an income of, let's say, 1,000 cedis, but then we've only received 800 cedis. In this situation, there is an income owings of 200 cedis that we need to receive. Okay, so this is a scenario of an income accrued, and the treatment is that anytime there is an income owings or income accrued, the treatment is that we are going to add the income owing to our gross profit. Okay, we are going to add our income owing to gross profits, and we also add it to our current assets. Is that okay? So that is the treatment. So when you go to your income statement, just after your gross profit, you add other incomes. Okay, we are going to add the income accrued. Okay, so you have our investment income in the trial balance. Investment income or income. Okay, and this is an investment income. I'm referring to this, an amount of 2,000. Because it is an income accrued, we add it. So we add income accrued. Income accrued of 800. This will give us 2,800. Okay, so we'll be presenting this amount in the income statement. Okay, and you can also open an account for this income. Okay, let's look at how it will look. We have income account, investment income. I mean an investment income. I'm talking about investment income account. Okay, and this is expenses, income due or income accrued. Income has a credit entry, or income has a credit balance. So maybe we've received the income through cash with an amount of 2,000 cedis. We record our 2,000 cedis. Mind you, I said we always add income accrued to income under the gross profit. So we are adding. So we have income accrued of 800 cedis, and this will be the balance CD. You get 2,800. This place must also give us 2,800. Okay, and the difference go to a profit and loss account. And this balance CD will come here 800 rather. This 800 cedis will be here as balance BD. You can see we are reporting the 2,800 to the income statement. That is why you can also see it here. Okay, so this is how an investment income OEs or investment income in arrears is also being treated. So now let's look at how investment income prepaid is also being treated in the final account of a sole trader. When we talk of an investment income prepaid, it is where an income have been received in excess. Okay, we've received an income in excess of what we have actually earned. Okay, a situation where we have received an income in excess of what we've actually earned. Sometimes you may receive an interest, or you may receive an income rather. You may receive an income where you will not work for. You haven't worked for it. They will pay you maybe an income of 1,000 cedis, and then you've actually earned an amount of 800 cedis. In this situation, they have overpaid you the income. Okay, you're supposed to earn an amount of 800, but then they've paid you 1,000 cedis. It means they've overpaid you with an amount of 200 cedis. Okay, so the 200 cedis is supposed to be subtracted from the 1,000 cedis to get the actual amount earned. Is that okay? But then in the accrued and prepayment or accrued and prepaid, you have to consider this principle. This will actually guide you to know how you treat your items. In the accrual concept, okay, it states that expenses paid or not have to be matched against revenue received or not. Okay, expenses paid or not have to be matched against revenue earned or not. Okay, so this principle will guide you to actually know how you treat these items. The reason why I'm saying this is that when I take expenses as an example, the expenses that are being found in the trial balance is what is actually being paid. But when we are reporting them in the income statement, we don't report the expenses that is being paid, but we are much interested in expenses that is actually being incurred. Is that okay? And when we are considering the income too, we are not much concerned about the income that is being received. The income that is being found in the trial balance is the one that is actually being received. But we are not much interested in that. We are mainly concerned in reporting an income that is actually being earned. Okay, so we are not reporting received, but then we are reporting an income earned in the income statement. Is that okay? So anytime there is an investment prepaid, okay, we are on this one, right? Anytime there is an investment income prepaid, that is income prepaid, the treatment is that we are going to less the prepaid income from our gross profits. After that, then we add it to our current liabilities. Okay, so you'll be having the extras will be that under the gross profit, after gross profit, Then we have our investment income. We have our investment income of 2,000 cedis. Then we less our prepaid. That's prepaid, income prepaid, less income prepaid. We are on investment income prepaid. Better still, let me clean this please, so that we will know what we are actually talking about. We are talking about income prepaid. So we less our income prepaid of what, 600. This will give us 1,400. So we will be reporting this to the income statement. Better still, we can open an account for that. That is an income prepaid account. Always income, we knew it has a credit balance, a revenue. So the one in the income statement, we record it here as 2,000. No, the one in the trial balance rather, maybe you receive it through cash, okay, and we are lessing, so we record it at the opposite side. That is prepaid. That is income. We have our income prepaid. Mind you, is the balance CD, okay, 600. When we are closing the account, obviously the credit side is bigger, 2,000. The debit must also be 2,000, and the difference will be 1,400. And this will go to the profits or loss account. That is why you can see we are reporting 1,400, and you can see the 1,400 over here. So basically, this is how the treatment will look like. So note, anytime there is a rent or anytime there is an expenses accrued or expenses owing, the treatment is that we are going to add it to our expenses in the income statement. After that, then we add it to our current liability in the statement of financial position. Anytime there is an expenses prepaid, the treatment is that we are going to less the prepaid from the expenses in the income statement. After that, then we add it to our current asset. Is that okay? And anytime there is an investment income accrued, or anytime there is an income owings or due, the treatment is that we add it to our gross profit. We add it to other income to a gross profit. After that, what we do is that we also add it to our current asset. Is that okay? And anytime there is maybe an income prepaid, the treatment is that we are going to less it from gross profit, okay? Anytime there is an income prepaid, we less it from gross profit, then we add it to our current liabilities, okay? So we'll be bringing our lesson to an end, and in our next video, you'll also be looking at how drawings will be treated, okay? Sometimes there may be cash drawings and stock drawings, and we will see how we treat them. So we'll be looking at how drawings is being treated, how provisions for depreciation is being treated, that is depreciation, in the final account of a sole trader. And we also learned how provision for doubtful debt will be treated. All these may be given in different ways, so we will be tackling how it will all be treated in the final account of a sole trader. But then don't forget to subscribe to my channel, so that anytime I drop a new video, you get a notification right there on your devices. And also like, comment and share my videos for the benefit of others. Until we meet again, bye for now.